So this is another heavily emphasized topic on the CPA exam for the FAR, so I wanted to go over it in detail. The payroll-related liability. So this is a legal requirement to withhold taxes from employees' paychecks. And there's taxes, federal and state, then there's payroll, and then there's voluntary deduction for third parties. So payroll-related liabilities go in three ways, and we're going to see it on the example here in a moment. They have three different pieces. They have the employer's payroll tax, voluntary deduction, and employees withholding taxes. So employers are legally required to withhold federal and state, Social Security, and withholdings from employees' paychecks. They have to remit it to the taxing authorities, and amounts withheld varies according to earnings and amount employees claim as exemptions. And then there's the FICA Act, which requires employers to withhold a percentage of each employee's earnings up to a specified amount. Employer pays a matching amount on behalf of employee, and self-employed persons pay both the employer and employee portions of the FICA taxes, the payroll taxes, essentially, right? So voluntary deductions include union, retirement or saving plan, and insurance premium, and they represent liabilities until paid to the appropriate organization. Employers' payroll taxes, employers' matching amount of FICA, that's employers' payroll tax. Employer pays federal and state unemployment taxes on behalf of employees. And fringe benefits, payment of employees' insurance premium and or contributions to retirement plans plus by the employer. So if we look at an example here for payroll-related liabilities, Crescent Lighting and Fixtures payroll for the second week in January was $100,000. The following deductions, fringe benefits, and taxes apply. Federal income tax, $20,000. State income tax, $3,000. Medical insurance premium is $1,000. Only 70% paid by employer. Employee contribution to retirement plan, contributions matched by employer. Yeah. Union dues paid by employees. Life insurance paid by employer. And these are the applicable rates. So when you look at the calculation, let's see here. So they debit salaries and wage expense, right? And what they credit is withholding taxes payable, federal income tax, state tax, Social Security tax payable. Everything is a percentage of the 100,000 base, right? And they're crediting the payable because this is the expense, and then there's some withholdings that they're saying will be payable, and they're going to pay them later, right? So 23, then 6,200, 6.2% of 100,000, 1.45% of 100,000 is 1,450, 30% of the 1,000 is payable to Blue Cross Blue Shield, payable to Fidelity, that's for the retirement, the full 4,000, payable to local union on 100,000, salaries and wages payable, so that's going to be the net that they're going to remit. And then they're going to have payroll tax expenses, total of 13,650, and we basically bringing in all these payables that we have for payroll related, the Social Security, Medicare, the unemployment related, and the state unemployment. Okay, and we're putting all that in as payroll tax expense. And then for fringe benefits payable, we're putting in the same thing, bringing on those payables, and we're debiting the expense for fringe benefits, and we're including here the other piece for the fringe benefit, the Prudential, the Fidelity, and the Blue Cross Blue Shield. So this is the payroll entry, and I would review this a couple of times and review it in the text, and there's going to be a few more questions in the homework that we're going to do further detail on this one.